welcome to our clients and guests to this session on ESG investing. There are broadly two camps of investors when it comes to ESG investing, particularly in this cycle. In the first camp, investors will generally believe that companies that respect the climate ought to trade at high multiples as there's more money to be made as multiples rise. Then there's the other camp who believes that ESG characteristics are already expensive, but these companies will be a good investment because ultimately down the road, they will have more cash for buybacks. However you slice and dice it, it's a rosy scenario. But how much do we actually know about what goes on behind the scenes? Because as many of us have heard before, a stock's performance is also dependent on who ranks them and how it is rated. So this afternoon is my pleasure and honor today to welcome MK Research onto our panel to talk about three key issues. One, what is the state of play for ESG investing in ASEAN? Two, do ESG investment approaches differ between ASEAN markets and developed markets? And three, is ESG research more an art than science? And what should ESG conscious corporates anticipate when they stand in front of the investment community? So on the panel today, I'm very happy to introduce, we have Anand Pathmakanthan, who is our Regional Head of Equities Research. We have Maria Lapiz, our Thai Head of Research, and we have Thilan Wickramasinghe, our Singapore Head of Research, and he's also our Regional Sector Head for Banks. To our audience on the floor, the Q&A box is actually on right now. We'll do our best, the committee will actually do our best to feed your questions to the panelists as we receive them. So without further ado, let me direct the first question to Anand. Anand, what is the state of play for ESG investing in ASEAN? Perhaps if we focus on the performance of ESG indices and also the growth outlook for the ESG ETF market here. Anand?
Sure. Thanks, Seng, and hello, everyone. So, let's lay some context first. The two undeniable facts about sustainability now that I think everyone accepts. One is the massive growth in AUM for sustainability funds. It's impossible these days to open up a financial periodical and not see some headline about AUMs for ESG funds or sustainability funds doubling or tripling over the next 2 to 3 years. And that's happening on a global scale. And in ASEAN, we will enjoy that kind of growth as the sustainability environment here matures as well. And the other fact is, when it comes to performance, where 5 years ago, many investors were still very iffy about whether ESG made a difference to performance. I think that a lot of those concerns have been laid to rest by very hard evidence. You don't have to look very far. If you look at MSCI ESG Leaders Index versus the Asia ex-Japan Index or the FTSE for Good Asia ex-Japan Index, they've been far outperforming their conventional counterparts for many years now, and especially during the pandemic. So those two facts are in the background when we turn our attention to ASEAN. The reality for Asia is we are still a very small part by comparison to the global sustainability AUM pool. And the bulk of it is in North America and Europe. But if you look at Asia Pacific, the three countries which stand out with rapid growth and very large pools, Japan, Australia as well, in an Asia-Pac perspective. And the biggest growth obviously is coming from China. So what's driving that growth? Obviously you have to have the underlying assets or investable companies to grow your sustainability AUM and your ETFs as well. And China is delivering that in spades. They have massive investments in renewables, in EVs, as a previous speaker also talked about decarbonization. So there's plenty of assets in play to build products off, including ETFs. Coming back to ASEAN, not so easy at this point in time. I think the ASEAN mindset among corporates as well and regulators is, ESG has been viewed more as a risk rather than an opportunity, given the very negative headlines that tends to be associated with ESG and ASEAN. So it will take some time to reverse that mindset. But when it reverses and we start looking at the opportunities and providing the companies with these sustainability credentials, I think that's when our growth will start catching up with other jurisdictions in terms of sustainability AUM.
Thanks, Anand. Thanks for quantifying that. So let me then ask you this related question then. This part of the region is also, I would say, drastically different from developed markets. For example, in terms of manufacturing, the West would basically outsource their processes here. We would take our raw materials, convert it, ship it back to Europe and the US. How will ASEAN asset managers then integrate ESG factors into their screening and active ownership processes? The question here really is, do ESG investment approaches in this region and developed markets differ? And if so, do you see it converging over time?
Yeah, I wouldn't say integrating ESG is completely new to investors in ASEAN. Frankly, we've been doing it for decades in one form or the other. Governance, which is part of ESG, obviously, has been a part of the investment thesis for decades now. Sharia investing is a form of responsible investing. It's a negative screening process that sort of narrows the investment field based on faith-based or norms-based criteria. So I think when you talk about integrating, there's obviously a growing sort of amount of experience in this for local investors and local funds. And I think when you talk about the mechanics, it's really the same in developed markets compared to emerging markets like ASEAN. There's a qualitative process to it, which is really bottom-up fundamental analysis, which, when we look at the ESG issues and how they affect the growth drivers of the companies, the costs, the sales, margins, and then we integrate that into the financial models and come up with a view or evaluation based on the ESG integration. And then there's the quantitative view, where we look at scoring of ESG criteria, and then we plug that into a quants model. So I don't think that part is very different between developed markets and developing markets, how the investors sort of integrate ESG. What is perhaps different is the quality of the information available in DM versus EM. So obviously in DM, they're much more mature in terms of disclosures. And in some jurisdictions like the EU, they are far advanced in terms of regulatory push for listed companies to disclose on a more uniform basis. And taxonomies are being developed as well. I think for EM, we have quite a long way to go in catching up with DMs in terms of disclosure. And that's going to impact our ability to, I guess, optimally price in ESG issues for quite a while.
Okay, thanks, Anand. I'm going to direct the next question to Maria. Maria, just like Anand, she and the team has basically just issued a compendium on the Thai market, and Anand had done the same with the Malaysian market just weeks ago. So Maria, at the country level, as we saw in Anand's ESG compendium just recently, the domestic ESG index did not outperform the benchmark index. Is this the same observation in Thailand also? And if so, what financial motivations are there for corporates to catalyze ESG adoption faster? Maria?
Yes, hi, can you hear me?
Yes, hi.
Yes, sorry. Okay, it is the same in Thailand. The performance of the components in the sustainability index is not different from the broad market index. For the companies to participate in, they need to buy into the whole agenda of ESG first, and then perhaps down the road really quantify the monetary benefits of embracing the ESG agenda, and so they can see it more clearly. And then as that becomes more evident, it will encourage more to be more serious in the pursuit of being ESG compliant. Okay,
all right. Let me just kind of quickly go back to Anand, because I wanted to set the stage before our audience gets the wrong impression that doing all of this ESG is actually not a profitable endeavor. Anand, in your report, I believe you had stated a reason why the FTSE for Good index actually kind of tracks the KLCI in that sense. Could you kind of share with the audience why this is the case?
Yeah, so it goes back to my original statement where, we sort of lack the breadth of sustainability investment options in ASEAN at this point in time to really construct a differentiating index. And the case in point is Malaysia. So the KLCI index, 30 stocks. And then you have the FTSE for Good index, which is 70 plus stocks. But in the FTSE for Good index, 23 of the 30 KLCI stocks are in there. And these are by far the biggest market cap stocks in Malaysia. So when you look at the correlation between those two indices, invariably, there's very little differentiation in their performance. And that's just a function of the market, the lack of true true differential baskets of conventional versus sustainability stocks. So there's a lot of overlap. So I think you have much more room for that kind of divergent performance to be shown on a global perspective or a regional perspective, because there's such a much bigger field of sustainability assets to choose from as compared to just looking at the local indices in ASEAN. As stated before, we are a very old economy, so we take what we can get for our sustainability indices. But ideally, you'd want a situation where you'd have a lot of the cutting edge technologies, decarbonization, recycling, renewables in there, which ASEAN lacks.
I see. Okay. Before I move on to the next question to Thilan, let me just take one final question, ask Maria for one final question in terms of her coverage universe in Thailand with respect to ESG. Maria, to that point in terms of, my last point in terms of why corporates would actually be incentivized to actually adopt ESG faster rather than slower, is a point you made in your report that there are actually tangible financial outcomes based on some of the companies that you've seen so far. Can you talk us through what are some of these tangible benefits, and let the audience know in terms of ESG type companies versus non-ESG type companies, the differences that you see?
Yes, the more visible ones, the easier one to quantify is the cost savings. As you, for example, change in the big box retailers, they are changing the conventional roofs with solar panels, and in that process, they can lower their electricity bills, and over the capex cycle of a solar panel, they will have a net benefit in terms of cost savings. In another specific retailer like home improvement, they have a product category they call eco products, where that incorporates many characteristics of environmentally friendly goods. And for this product, the margin is much higher than the original portfolio. Yes. And the other one that is becoming more visible, especially since last year, is the access to sustainable finance, whereby for some cases, the coupon rate of the debenture could be as low as 1.3%, 1.5%. So these three areas are the ones where we are seeing the benefit of embracing the ESG agenda.
Thanks, Maria. Thilan, I think this is a very relevant juncture for you to come in right now on Maria's point about sustainability finance. And we've heard about your discourse with Dato' Faisal earlier in the banks segment. What role do you think the ASEAN financial sector could play in driving sustainability as regional economies start to open up post-pandemic?
Thanks, Yeow. I think as financial intermediaries, the banks have a very large role to play. And I think, as you rightly pointed out, the session before, Dr. Faisal also spoke quite at length about it. I think individual companies can't make much of a difference, particularly in the ASEAN context where there's a large economic contribution from SMEs. The banks can take a portfolio approach where they can extend financing to green opportunities, to new green business lines, and at the same time withhold financing from areas that are not sustainable. And I think it's also important to remember that banks don't only just lend money, they offer multiple other services from cash management, transaction banking, wealth, where they can incorporate sustainability as well. So think of banks as a way, almost as a place where you build sustainability capabilities at scale, which can then get pushed on to their customers. But I think in ASEAN, the biggest role the banks can play is transition. There's a lot of endemic brown industries in ASEAN: forestry, plantations, mass manufacturing, fisheries. That's the nature of the region. So the regional banks will have an outsized role to play, and also significant opportunities to help a lot of these businesses transition from brown to green.
Thanks, Thilan. Actually, on this point, that Anand, if I could direct this question from the floor to you, it's a question on Malaysia. And as we know, Malaysia is actually party to um, the Paris Agreement, and it's basically that its target is to reduce greenhouse gas emissions by 35, anywhere between 35 to 45% over the next 10 years. But because of the fact that many of its industries are in these brownfield industries, as Thilan just alluded to, oil extraction, palm oil plantations, and even the power generation, it's stuck in to coal-powered generators for the next decade. How should Malaysia corporates actually, or what help can the government actually offer Malaysian corporates to help them during this transition period? Anand?
Yeah, just carrying on from what Thilan said, I mean, the banks obviously have a big part to play here in terms of advisory and providing the transition capital to make those transitions, because these transitions require huge amounts of capital. But I must say there's no easy answer to this, even for the government. If you look at the structure of some of the industries that Malaysia has relied on for decades, oil and gas, every time we need money, we turn to Petronas. Petronas has always been there for us, even with the recent Quant Fund, as well as dividends for the government. What do we do to transition that industry without sacrificing the cash flow that has been, of such huge reliance for the country? Also, our power industry, as you pointed out, Tenaga, over 60% of its generation is coal-based. A lot of the rest is gas. These are all fossil fuels, and they will get or attract an increasing discount from investors as time goes by. And of course, the risk of stranded assets as well. So I think besides the banks, the governments obviously have to steer these industries or encourage them to move and speed up their transitions. I think Petronas has already stated they have a 2050 goal to be carbon neutral, at least, if not net zero emissions. So anything the government can do to help that, I think it'll be a carrot and stick approach. There could be incentives to wean them of dependence on fossil fuels. But it could also be the stick, carbon taxes maybe from a very low base. I believe Singapore has already started carbon taxes. Should we start that in Malaysia to get industry moving along faster on this transition curve with the banks assisting in that transition as well? So I think the message I'm giving to you here is we do have real problems in Malaysia in terms of huge dependence on industries which are brown, or dirty, which need to transition. But the answer is not one authority driving it. You need the government, the banks, and the regulators to all come together and have clear targets for industry, and then provide the incentives to get them there.
Thanks, Anand. Anand, this is a related question, but it's not on the brown industry, but on a green industry. So the question that was posed from our guests and clients from the audience is, if we look at the EV industry in particular, Indonesia is doing a heck of a lot in terms of making sure that its markets are open up as quickly as possible to ride on this EV train. So over the next 9 years or so, it aims to produce 20% of its vehicles in EVs, and that is basically to replace ICEs, or internal combustion engines. And then over the next 15 years or less, they want to basically stop ICEs altogether. And of course, the government is doing its best to basically attract titans such as Hyundai, likes of Teslas and battery makers from China to come and set up cottage industries within Indonesia. Can you give us your thoughts? Of course, we understand you're not the government, but can you give us your thoughts how Malaysia could actually help catalyze this process and and get a share of the pie?
Yeah, I mean, we have written extensively on the ASEAN EV industry, and a lot of it is in our compendium as well. But I think the Malaysian government really needs to get past this tension between dependence on so-called old industries and the future. So EV, we're still struggling to come up with a roadmap. And that's because there's so many conflicting interests, even as distant as fossil fuel reliance of ICE vehicles. Petronas is one of our biggest, industries, and it's a fossil fuel industry. Do we really want to signal we're moving completely into EV when, our economic backbone is still very much fossil fuel based? And you see these tensions in other industries as well. Power. How quickly, we should be running to implement renewable projects, but how quickly can we move when the backbone of power generation in Malaysia is pretty much captured within fossil fuels for the next 10 years at least? It's locked in through PPAs, reliance on coal as well as gas. So the government has to break those tensions. We have to be bolder. Not everyone can win from transitioning. There will be losers, but the important point is to transition, because if we do not transition, we risk being locked out of global supply chains and markets, which is what Dr. Faisal also mentioned earlier. It's not just about domestic regulation. We have to keep up with international regulation if those markets are to remain open to us. So really, it is on the part of the government to come up with concrete ways to break these tensions and lay out a blueprint to move forward so we can move forward.
Thanks. Thilan, I'd like to direct this next question to you. So we've heard from Anand in terms of how much the government could play in their roles to help catalyze the adoption of a transition into greener projects. It does sound like there's a lot for banks to be optimistic about, and I'm sure Maybank is as well. So, with this increasing competition amongst financial institutions for green financing, will this drive a race to the bottom in terms of margins and give rise, worse still, give rise to greenwashing? Thilan?
Yeah, that's a good question. I think competition is the wrong way to look at it. As you say, I think the regulations, investors, a lot of this is going to move more and more demand to sustainable assets and financing versus conventional financing. So I think the pie is going to get bigger for green financing, and it's going to get bigger faster. So over time, I think the conventionally financed assets will actually become riskier. If banks only want to finance green, anything that doesn't qualify inherently becomes riskier. So while they will have higher margins, on a risk-adjusted basis, they actually might not look that good. And on the flip side, a green asset, which may look like it has a lower margin, but on a risk-adjusted basis, it really doesn't. So I think over time, as banks go green and pull out of non-sustainable assets, banks that are holding the stranded assets are going to face a significantly higher risk. So they might look like they have a book with much higher yield assets, but I don't think those yields are necessarily going to offset the risks that they're taking.
Okay. If I may, I'll just ask you a tag-on question. Which Southeast Asia bank, in your opinion, is championing the ESG really well then?
I think we are still at early stages of it. I think, we've seen, I think it's more of a regulator-driven drive. So I think Singapore generally has been pushing the ESG agenda quite aggressively over the past few years. We've seen a lot of the Singaporean banks coming out with, very clear sort of green financing targets. They've all got, fairly comprehensive sustainability reporting and so on already in place. So I think, within the region, the Singapore banks tend to be slightly ahead of the others.
Thanks, Thilan. Anand, let me take you and the team into your kitchen right now, which is basically, where all of these ratings and research processes take place on a daily basis. You manage a team of roughly 50 analysts across the region, and their main jobs are basically to rate and rank stocks on a daily basis. MK Research uses Sustainalytics, an independent provider of ESG risk ratings, to augment its analytical framework. How do you reconcile the differences between a Sustainalytics rating score and MK's own scoring methodology? I'm sure there will be differences. Could you walk us through how you manage this, and especially, from the perspective of a self-bias effect?
Sure. I mean, a lot of clients ask us that, to be honest, because they always say, hey, Sustainalytics, why don't I just buy the 50 top or lowest ESG risk stocks on Sustainalytics? I don't really need anything else. But that's obviously wrong. I think the reality is ESG analysis and scoring is not an end in itself. It's a facilitator to make the correct investment decision. So at the end of the day, you still have to have that investment, however ESG compliant it is, make you a return that is the return you are targeting. And that's where the analyst input is hugely important. Now, we sort of divide the process into two. There is the analyst view, which tends to be qualitative, leveraging off their very close relationship with management to get insights into the sustainability strategies. And importantly, it's very forward-looking. You don't get forward-looking insights from ratings agencies. They do very much a stock take of where things stand as they are. But if you want to know what management is thinking about the future and how they're going to change their behavior, you're not going to get that from a scorecard. You're going to get that from an analyst. But having said that, there's definitely a place for sustainability data as well, because supplementing the qualitative analyst view with a quantitative scorecard is extremely useful. Obviously, it saves us a lot of resources, filling out our own scorecards, for this data. And it does give us some perspective of how, external rank or scorers view these companies. Now, you're right, there's always some tension. We don't always agree, primarily because, as I said from the very start, it's not a means, it's a means to an end. It's not an end in itself. We have to make money from investments. So many stocks that score highly which are scored highly by MSCI or Sustainalytics, which we use, say in industries like tobacco or gaming or property even. As an analyst, yes, we may acknowledge that ESG is good and they tick a lot of boxes, but can you actually make money out of that investment on a 2 to 3 year time frame? And the answer may be no. And in that case, we will not include that stock within our ESG portfolio because that portfolio has to make a return. So that's how we look at things. Whenever there's a conflict or a tension, we tend to favor the analyst view because they have that forward-looking view and they're much more clued up to where the industry itself is headed.
Thanks, Anand. Let me try and get a different perspective from Maria. Maria, how would you, based on what we've heard from Anand how would you link these risks and opportunities that you identify in your research processes to the most important financial metrics that your team follows regularly?
Yeah, so a lot of what companies have to do under the ESG banner has cost dimension to it. And as of now, it's not parceled out as an ESG related. It's mostly lumped into general activities. So it's not possible yet. But if we look at the various financial metrics, it should be in the EBITDA of the company. It should be captured there. But the thing that is missing at this point in time here is that there is no quantification in relation to the benefits. It's not flushed out yet. So we do not see that as a very clear feature into our valuation of companies. But what we see though, based on what Anand has indicated, is that the forward-looking position of its companies with regards to certain variables is quite important. It may not be possible for us right now to really quantify it, but I think down the road, it will become an easier task as the generic activity to improve, to bring in growth organically in terms of efficiency and such will fade away, and the ESG related initiative will come into the fore.
Okay, all right, thanks, Maria. It does sound like, at least for now, that the screening process is more of an art than science, when ESG is concerned, especially when scores have to be kind of commingled with a human, with a different team altogether, with perhaps a different methodology. So let me just extend this question over to Thilan. Thilan, earlier on in your session with Dr. Faisal, we had spoken about banks in terms of, how some of these ESG efforts has translated into returns and ROI for Maybank. There's also a question from the floor from one of our clients. And his question is basically this: as a company who is embracing or is looking to embrace ESG, Can you elaborate on the cost to the company? Is there a way to quantify that for human resource involvement, engagement of consultants to measure these ESG metrics? Because for the client, these would be very important signposts to ultimately evaluate, whether it's an ROI for the company by going down this path. Thilan?
Yeah, so I mean, I think, you have to look at it from a longer term perspective. So I think, any business that is not, embracing ESG as part of its core strategy on a long term basis will have and we talked about valuation, Maria mentioned valuation, will have a terminal growth rate of 0 or negative, right? So I think that is a very clear way of valuing the intrinsic value of long-term value of a company. So, I think the cost side, it will depend on industry to industry and, company to company. So I think, what is more important is to understand that there is no ROI, especially from a risk-adjusted basis, unless you start investing in the peoples and the processes and changing changing your business model. And that's something that we discussed in the previous session as well. So I think the banking sector, is transitioning and is putting in the taxonomies and the frameworks. It's still very early stages, but it is happening to help companies transition. And I think it'll also play an outsized role, particularly in the ASEAN region, to help companies transition because they have the scale to build capabilities, which then they can, as I mentioned earlier, push down to companies.
Okay, I hope you don't mind if I ask you this next follow-up question. It's again from the floor, from one of our guest clients. The question is basically this: based on your response earlier, should investors then support an ESG agenda by lowering their returns expectation, for taking these ESG initiatives, because these may incur investments in a short run before the J curve kicks in? Could you perhaps take this, Thilan?
Yeah, so I mean, I don't agree that you have to necessarily lower your investment expectations, and I think it very much comes down to how you look at from a risk-adjusted basis. As I said, there are no good investments that are not ESG investments, and I think the banking sector is very clearly showing this. With the shift towards, moving more and more into green financing, even though optically the yields look lower, from a risk-weighted asset basis, they're actually not that low. So I think, overall, as we go forward, if the businesses that you're investing in is not sustainable, whatever sort of returns that you think that you're getting on a risk-adjusted basis, it's actually not there.
Okay. And if I might just round this up before I move on to a different question altogether. So we've heard that these are some of the major sustainability challenges faced by corporates. How about from an Asian financials, from an ASEAN financials perspective, banks perspective, as they execute these deals, chase them? Obviously, there will be a period of transition before information becomes fully transparent for the banks to act on, for the credit committees to act on. How then should banks basically manage themselves as they assess these risks during this period? Thilan?
Yeah. I mean, I think one of the biggest issues you have is, the putting in the right sustainability frameworks and taxonomies. So I mean, I think that's a significant challenge within the region. And I think also, banks, and I think all businesses have to grapple in terms of how do you make sustainability sustainable from a profitability point of view, in terms of how do you balance the different responsibilities you have to the different stakeholders. And I think particularly for ASEAN banks, I think the biggest challenge is to decide what to fund and what not to fund. A great example here is, and Anand kind of alluded to this earlier as well, is coal or hydrocarbons. A lot of the power systems in Southeast Asia, the feedstock is coal. So if you pull out of coal too early, you actually might leave some economies with no reliable power systems because they can't afford to transition to something greener. So I think for a lot of banks, it's just balancing how do we, meet our overarching green and sustainable goals, but at the same time, how do we enable this transition to happen? So I think that's also one of the key issues that a lot of these banks and companies also have to face and solve.
Okay, thank you very much for that. Anand, Maria, if I might just turn this question to you. It's from the floor, but let me try and paraphrase this. What might be some challenges that you anticipate in terms of gathering information? It was just reported in Financial Times just days ago that even titans like Microsoft and Alphabet are pushing against full disclosure on ESG. How do you, as a research practitioner, get around that cloak in this region? And how do your analysts actually discern what is greenwashing or not? Maybe I could direct this question to you first, Anand.
Yeah, again, I don't want to overplay our analyst hand, but this is where having a good analyst team comes into be very important. Now, publicly available information, yes, everyone has access to that. Many companies have differing views on how much should be disclosed. If you look at Bursa Malaysia's sustainability statements from companies, even though there are certain requirements, companies still have a lot of flexibility in terms of how they want to, phrase that disclosure. So there's no standardization, and it can be very frustrating if you're just relying on those annual reports. But obviously, as a research house, we have access to management, and we find out that that access to management gives us a lot more insights than it is obviously publicly available information, but the fact is that we have access to them on a real-time basis, and we're able to update our views and our expectations of their sustainability strategy very quickly as well, and digest it. So I think, yes, there is no solving magic bullet for disclosure unless regulators just stand up and say, do it or else, we will punish you. And that's a whole different can of worms. So you really have to rely on alternative sources. And I guess from that perspective, research and analysis will have a big part to play.
All right, thank you. Maria, would you agree to this, or do you have maybe a slightly different view on this? Maria?
Yeah, I totally agree. Just one slight addition. And this is not to overplay the analyst's hand in this whole thing, but years of experience covering the company and the industry really helps a lot in distinguishing what is real and what is greenwashing and what is lip service.
Okay. Actually, this is a question from the floor right now, which I hope either one of you could take it. It's like a wrap all. The question is this: what ESG training do MKE's research analysts go through so that there's some consistency in the way that they evaluate risks and opportunities? Maybe Maria, since you're online, could you take this first?
By practice. You go into just basically go deep dive into the company's history, reports, sustainability, and reports, annual reports, and so on, and then news. That would be the starting point, and then you look around and look for reasonable benchmarks. Right now, we have some few analysts doing charter course for ESG certification, and so hopefully that can also add additional in terms of knowledge and to how to go about this ESG analysis.
Thank you. Thilan, could you add to this before we move on to the next topic?
Yeah, I mean, I think, part of it is SGX does have some frameworks in terms of sustainability. So that's something that we certainly look at. I think, experience in terms of deep diving into a company and really understanding the different aspects of the drivers matter a lot. And that really comes into play when you're trying to identify whether it's greenwashing or whether it's a real initiative that a company is taking part in. But apart from that, already about a third of our analysts are certified on sustainability, and the rest of them are actually doing the certification. So we should have a team that is almost 100% certified in terms of sustainability analysis and qualifications.
Okay. Thilan, since you're there, could you take this question? How can corporates and regulators, in particular regulators, incorporate ESG into their overall strategies? And what should corporates, really be mindful of?
I think it's two things. I mean, I think the regulators we're seeing across the region, understanding and appreciation of that the need to have ESG and reporting and being put in place, right? I mean, Singapore is a great example. The MAS at a regulatory level has put out a number of mandatory disclosures, things like that companies have to follow. SGX also has mandatory disclosures that all listed companies have to follow. So I think, and Malaysia as well. So I think, the regulators are pushing for on the disclosure side as well as from a risk management side. So I think for companies, what's important is to understand how their business sector is changing and what are the forces that are changing it and how the capital flow for their industry is evolving. So in order to ensure that your cost of capital is low, I mean, a lot of these companies will have to embrace ESG. And I think a lot of the regulators are helping with the sort of frameworks that they're putting in place. But it's still very early days. So I think there's no real comprehensive regulation that is out there. The different ASEAN countries are at different levels. But I think it's all moving forward.
Okay, thank you, Thilan. I'm mindful of the time, and there's still a lot of interest in terms of how clients and investors can actually utilize, this great opportunity as companies move towards ESG adoption to quantify the risks and opportunities. So let me direct this question, second last question, to Anand. Anand, how do you discount ESG controversies into your fair value targets? Conversely, I mean, if you see a company that is basically transitioning away from, let's say, thermal coal into metallurgical coal, which is supposed to be better, and how do you then give a premium to companies who are making such a move? Anand?
Yeah, so when it comes to reflecting ESG factors into valuations and forecasts, there's an operational aspect and then there's a valuation aspect. See, the operational aspect is the actual P&L impact of what is being done by the company, what has changed in terms of the strategy of the company to become more sustainable. So in your case of coal, there will be an obvious P&L impact that we would quantify. But like I mentioned before, when we look at the valuation aspects, we do tend to look a lot at the basis for the valuation, cost of capital or PE or PB. And we would adjust that to reflect the sort of the brand equity, so to speak, or the ESG equity the company is building up by making this transition into a more sustainable business model. And that would be reflected in, say, a lower cost of capital, or maybe higher multiples versus a peer group for both PE and PB. I mean, if you come back to your operational aspects, we can even model those. So we could, if say a company had major environmental risks, we could factor that into our costs or our long-term cash flows, or maybe a social risk, too much employee turnover. We could impute that into higher cost ratios for the company going forward. So all these can be imputed. It's not, all very subjective. It actually can be quite well reasoned and impact our P&L and valuations quite clearly.
Thank you, Anand. I'm just reminded that we're on the hour, so we have to essentially kind of make way for the next team right now. So let me take this opportunity to thank the panelists for this invaluable insights. And I can say with confidence that as ESG investing becomes more mainstay, I think doing good is never bad business, but there's also growing evidence that it can be profitable too if it's done right. So to our audience, thank you again for your generous participation. We look forward to having you in our next and final session for the day, which is on Vietnam, what to expect from the new government's economic and foreign policy agenda. With that, thank you very much.
Thank you.
Thank you.